There we go.
Welcome to our inaugural podcast. My name is MrNotAdvice, and I'm a former professional trader and investment banker, and I've got my partner here today. And go ahead, why don't you introduce yourself?
I am Krzysztof Piekarski. I'm a long-term investor, starting when I was 17. I'm about to turn the ripe old age of 45, so it's been a minute. And I've been a writer for The Motley Fool. I'm currently a lead advisor over at 7investing.com, and I'm co-host with Luke Hallard on the WallStreetWildlife.com website and podcast.
Thanks. When I approached you about this, it was because I really respected the way you looked at things. You always provided your unvarnished opinion, and you're good at it. So I'm super excited about it. And I know that we've talked about the format, and really our podcast is going to be freewheeling. We're going to talk about topics, and we tend to agree sometimes, and sometimes we tend not to agree. Wouldn't you say that's true?
I do, boss. I think I'll tell you the backstory after how I found you. I think that would be interesting to
Sure.
listeners. I found you right at the peak of the biggest investing mistake I've ever made. So after doing this for a long time, I still fell, I think the mistake was greed, if I'm going to name it, because I found the EOS story to be so compelling. And then I did this massive amount of research for months and months and months. And, my eyes got too big for my head, took on excessive risk. Delays happened, all the unknowns came out of the woodwork, and I lost a massive amount of money. So that's essentially when I found you, and you were teaching people how to invest in a style that is unknown to me. And I guess not unknown at that time. When I found you, it's not that I didn't know about it. I knew about it, but I just never studied it, and I stayed far away from it. And I started listening to what you were teaching people, and your approach seemed methodical, deliberate, experienced, and rational, and based on, I think you would agree, math and probability.
Mm-hmm.
So from my perspective as a lifelong learner, if nothing else, I said, why don't I learn from someone who's done this for a long time, and who knows what I'll discover. So that's how we crossed paths.
Yeah, I remember when we first, and you're the same way today as you were when you first started. But I do remember I guess that I use as the ferocity of your desire to want to learn, and that's one of the things I quite frankly that I see. Maybe you can comment on this. I see a lot of retail or traders in general. They get confidence from nothing more than what they think and what they feel on an investment. And there's a stubbornness almost that, and one of the stocks I want to talk about today is Enovix. There's a stubbornness about investing that I think people get, that they say, well, no, I'm going to stick with it. And, there's some key phrases. Well, I'm a lifetime investor. I fully support this company. And you've heard me say, I'm like, the company doesn't care. I mean, literally, the company doesn't care. The CEO doesn't care that you're a fan. That's not their job. That's not how they're going to make money. But there is that stubbornness, and I've fallen into that too, man. I mean, I'm not perfect, and I learned the hard way. I learned by doing it that way and trying all these other different methods, until my mentor had mercy on me and said, you work a lot, but you suck at trading. And, as a professional, that doesn't really bode well for your business outlook if you suck at the thing that you're supposed to be doing well and providing to others. But yeah, I know that there is judgment involved in trading, but I think that the way I try to do it is what you said: probability, technical analysis, because I'm really trying to remove as much emotion and bias as I can. I don't know what your full history in terms of that stubbornness, right, that exists.
Yeah, well, that's the interesting thing. You would think after doing something for a very long time that you can, in a way, cure yourself of all the human bias and
Mm-hmm.
subjectivity and emotionality. But, you know, I honestly don't think it's possible to do it 100% of the time because we are
Agreed.
human. I think the difference is that we could try really, really hard and be very aware that this is, a mistake or a kind of mistake to try to avoid. And over the long term, you get better and better at it. But as my own example with EOS demonstrates, the failed investment I mentioned earlier, the story just got too compelling for me and it blinded me
Mm-hmm.
despite the experience, despite the, everything I knew about risk management.
Did
Uh,
you ever have during that process when you were, let's say, going deeper than you wanted to? Did you ever have any time, moment in that process where that little voice inside of you said, I don't think we should be doing this. Let's.
uh, that's the bitch of it. Not only did I have the voice, I actually had a really seasoned investor friend of mine call me and we talked about it.
Hmm.
We had a lengthy conversation and he asked me straight up, what do you think the risk of success here was? And is. And I gave an answer like 60% or 70%. And
Mm-hmm.
his jaw dropped. He's like, are you fucking kidding me? He's like, he said
No
it's like,
revenues there.
like 5%, or it's like closer to 10%. It's not 60%.
Hmm.
And I heard that, I'm a rational being and I was in too deep. Yeah, it's mad in hindsight. In hindsight, it's maddening.
Mm-hmm. Yeah,
When you're in the
I think.
middle of it, right? When you're in the middle of it, I'm like, shit, I could retire early. This is the one. It's my last kind of big play. And then of course, of
Where do you
course
think
it
that comes from, though? Do you think that comes from a pride issue or a greed issue or a combination?
I in thinking of myself as an investor, I think I'm pretty good with pride because I'm very willing to admit my mistakes
Mm-hmm.
in public. I honestly think I committed in this case one of the three egregious investing mistakes, which you already named. It's greed. It was
Hmm.
greed because the stakes were so high, and I thought the probabilities from my perspective were so good because of the research I've done.
Mm-hmm.
Uh, that's I guess the other piece of it. It's I think one thing to you know make a huge bet just hoping
Mm-hmm.
because of greed, but I think because I followed the story and obsessed over it for months and months and months, that gave me the false confidence to back up my greed. So
Hmm.
almost like greed was like it started to get hidden behind the confidence in the knowledge.
And I've experienced that. It's easy to get in some of these, threads, either on whatever platform it is, Discord or Twitter or whatever, and you sort of, you find people that agree with you, right? And then you get in this echo chamber where, yeah, oh yeah, this thing is, and you're effectively you're just supporting each other's incorrect thinking, you know? And I see that a lot in today's, markets where people are deriving their confidence to stay with what is obviously a busted trade, a busted investment at that moment because others are staying in it almost, right? oh, well, the room or the chat I'm in, they brought up a great point that if EOS does this, man, I'm going to make more than $1 million on it. I'm going to make $2 million. And, it's like that suspension of reason that occurs in some of these chat forums or online communities about a particular stock. Were you in one of
Yeah,
those?
yeah, no, but this is actually something I've studied quite intensely. It's worth talking about. This is great in a first episode to get to this
Mm-hmm.
idea immediately. You know what the analog is, I think? We see this in politics. And if I could unwind this idea a bit,
Mm-hmm.
one of the hardest things for human beings to do, I think, because we're literally programmed genetically to think in terms of tribes, because
Mm-hmm.
our survival depended on it.
Mm-hmm.
Getting kicked out of your tribe actually might mean death.
Mm-hmm.
That once you pick something like a political party or political candidate, you realize then mostly your friends and family will be aligned with you, most likely, right? It's very
Mm-hmm.
odd to have huge divergences across politics. So if you then come across, say, something bad about the candidate of your choice, you're faced with a difficult dilemma. Because if you switch your view, you get a new candidate, right? That in theory is better than the old one, but you lose your friends and family and essentially your identity. You
Hmm.
literally begin to lose your identity. And from the psychological perspective, that is one of the hardest things for humans to lose.
Hmm.
Because again, it might mean death, at least the way our genes,
Mm-hmm.
perceive it. And so echo chambers within politics are a thing. We know they're a thing.
Mm-hmm.
You could actually be told your candidate is a liar or your candidate is X and Y, and you won't care. You won't care, right? The confirmation bias apparatus steps in, clicks in, and says yes, but right, and then you stop listening or you. And so I think it's the same thing that happens in investing. Once you put some amount of money, you find your community, like you were talking about with Enovix and EOS. People begin liking each other, knowing each other, trusting each other. We're all in this together kind of mentality. And then
Mm-hmm.
when some conflicting piece of evidence shows up, you dismiss it.
Yeah, jokingly, I've referred to it as, it becomes sort of a investing circle jerk, where you're sort of all sitting around and, you're encouraging each other in bad behavior, effectively. Or instead of saying good or bad, illogical behavior. It's illogical. I mean, if you're gonna, like you say, for politics, right? I mean, so much of what comes out of people's mouth is completely illogical, right? And they'll stick with it. Um, and if they have an audience that also agrees with them, right, a community, well, they dig in deeper, right? They're really not going to be turned. But I still think for most people inside, there's that little voice that says, no, that doesn't feel right. And I think it's that discipline that we try to do by going back to the mathematics of it, going back to the probability, is at the end of the day, have you measured your risk correctly? And that's very hard, I think, to do outs, uh, outside of a echo chamber community, right? Where really the only reason you're there is to get affirmation for the decision that you made, and then you start, as you said, with the relationships that you do develop. You don't want to be the guy that says, hey guys, I think we made a very bad decision here, because you're going to immediately feel, personal rejection, and they're probably going to kick you out of the group. And so, you start putting in variables that have no bearing on the investment potential, right? Whether or not people like you or not is not a data point that is going to produce alpha positive returns for your investment. Whether or not you can find 10 other people that agree with you has no bearing on whether your investment choice is successful. But yet I think a lot of people seek that type of shit out.
They do. It's confusing. It's hard. This is what makes investing such a fascinating journey to me. It's both a study of the world and companies, that build the world, make the world, and
Mm-hmm.
it's a study of human dynamics and psychology and biases and emotions, and it's fascinating to me. I think I wrote this to you in one of our exchanges, boss. Had I, as an investor, done close to nothing from the moment I found companies and not tangled myself up with emotions and ideas, I would have been retired by now. It
Wow.
was the mistakes of, I call it, being human. if I want to be a little generous, it was my humanity that allowed myself to talk myself out of, uh, good investments.
Well, the good news is that you have cured yourself of that. I've seen it.
Humanity.
No, I don't think we ever cure ourselves of that. But the good news is you recognize it. I mean, look, most people, even when they're faced with the overwhelming proof that what they're doing is wrong, they will continue to do it because this time is different, right? Oh,
Yeah.
this time is different, And you know how often this time is different occurs? Yeah, right? About the same amount that the Eagles win Super Bowls. Not that often, right? And so, what I really appreciate though, and why I reached out to you to do these is you do have, and I think you keyed on a topic that psychology part of investing, right? Even algorithms are programmed by human beings, okay, and there's bias, and I think that human psychology of it, you can literally see it happening, in stocks where all of a sudden, everyone's euphoric, but then something happens out of the blue and then, oh, I hate it. Oh, this company sucks. Or it's like, well, what changed in 24 hours? Or what changed in an hour or 5 minutes ago? And it becomes this almost like this frenetic, behavioral response to, really meaningless data points, and I think we saw that in Enovix, which we'll talk about in a little bit. But yeah, that human psychology part and that self-awareness to know that we do have that tendency. We're going to seek out a tribe, right? That encourages us, even if the action that they're encouraging us to do is going to lead to that tribe getting hurt, and investing, it's losing money. We'll still stick with that tribe. And, whenever I hear the phrase, well, I'm going to dollar cost average, I'm like, well, you're in the tribe. You're drinking the Kool-Aid. And I'm not saying all dollar cost averaging is bad. I'm saying that most people who dollar cost average do it after they've bought a $20 stock and it's $1 and they're dollar cost averaging. It's like, well, price is telling you whether your investment thesis was correct or not, but you're not listening now,
Yeah, we should definitely return to dollar cost averaging. That's one of these, I think, complicated topics that deserves its own
Okay.
episode for sure. But I did want to mention something to you that I think is a great example of what we're talking about. I was looking at one of your Enovix tweets recently that I think was quite balanced, as they tend to be, and some random ex Twitter person took what I think was a fairly long post and identified only a sentence of it that said something like, your price target for Enovix was, I don't know, $60 to $90 or something
$80.
like that, right?
$80. Yeah.
Okay, that one, right?
Yeah.
And then he ignored everything you wrote before and everything you wrote after,
Yeah.
right? And then just quoted, yeah, aren't you the guy that said the stock is going to $80? Where you also, just to reiterate the point, said there's a lot of problems here. It might not happen, and all kinds of other things that might not happen. But if some of these things happen, then the stock has a shot at 80, right? You really contextualized the scenario, and this guy just looked as though he couldn't read anything else, and it's so maddening.
Oh yeah, when I saw that, it took all my self-control to be somewhat cordial. Because when I saw it, I was like, "You gotta be fucking kidding me!" I've done 40 posts. I've written multiple newsletters, and and I, humorously, I'm sitting there like, "Is this my mother?" Responding. She's cherry picking one thing, and she's forgetting the body of work, right? So is all my, and I still think I came back a little bit snarky because I'm a human being, but I didn't say what I really wanted to say was, get the fuck out of here. I mean,
Yeah,
come
right.
on, man. It was just, but people do that, right? People do that stuff where they'll take one small phrase or statement um, that they even themselves make to reinforce what they want to believe. Now, that guy, I think he was just an a-hole. He's never commented before on anything, and I think he just sort of, wanted to egg me on. But that you're right,
Yeah,
and
yeah.
I think I should get applause for the fact of the self control in my response too, because there were no f bombs or I didn't go after the guy. So
I think the bigger issue isn't that there are, some people like that on a platform like X, because that platform encourages those types of comments, right? So that's a known. We're not saying anything interesting there.
uh-huh.
The valuable insight, I think, is that kind of thinking, where you have a long paragraph that has a lot of history, that contains conflicting information, that tries to list the complexities in both sides of the issue, you still have people reading all of it and zoning in on the one sentence that they're looking for to prove or disprove their theory. And that we see in the investing world at large all the time. That
Yeah.
kind of, right, myopic, biased, confirmation bias. And that's the thing that is, the more we could call it out, name it, identifying ourselves, the quicker we'll make better returns.
Yeah, and non-professionals, look at, I think well, they used to anyway. I don't know if they do it as much anymore, but they look at professional portfolio managers and investment managers and mutual fund managers, and I got to tell you, they they do the same exact thing, literally. I mean, they'll read a research, they'll read a financial or a Q or a K, and it will say bad, 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 but they'll key on one good thing. And I think we see that like a lot of times with earnings season. Last summer, we were doing really well trading earnings, and all of a sudden we trade the next earnings. I'm like, what the hell? Well, the tone had changed. It would no longer matter whether the company beat or didn't meet, the earning expectation. It was all of a sudden forward guidance, right? You could have a company that really crapped the bed, but it said, but next quarter we're going to do really well. And to me, that is a classic example of professionals doing exactly what you're talking about, right? They're keying in on one thing to support their thesis, and their thesis is simply, I want to be long, or I want to trade this thing. Where I generally think I generally have a very negative view of the industry that I used to be in, because it's a subsample of the human population. You got some smart people, and you got a whole lot of stupid people, and then you got a whole lot of people that really, or somewhere in between. And I look at, I'm not the smartest guy in the room, but I try not to be the dumbest guy in the room.
You
That's
know what? This is a great segue, boss. I think, if I may,
sure,
can you properly introduce our listeners to your background?
sure,
Uh,
yeah. So
yeah,
I
yeah. The most important, yeah. Take us help us understand your knowledge base and all your experience.
You bet. I got into business, and so I tried to get. The reason why I got into business was I was working at a at a mortgage company, and the owner of the company was, I constantly heard her complaining about her Payne Weber broker. And so, I said the only stock I knew, two stocks were IBM and Procter and Gamble, was my family worked there. And so I said, hey, have you ever looked at these two stocks? And it was luck. It was pure luck. Well, as soon as I told her about them, they went up. And so she said, well, have you ever thought about being, an advisor? I'm like, no, I've never thought about that. I don't have a finance degree. And I've always been interested in the markets, but, who isn't? And so she sent me to her Payne Weber broker, and he was a complete jerk. And he said, oh, you'll never make it in this business. And okay. That just, fired me up. I was going to go try to get in business. And so I applied at multiple firms, made it through Dean Witter at the time. I made it through their screening process, scored the highest on their exam and all of that. And they wouldn't hire me either. And a lot of it comes down to what they looked for was, do you have friends and family, right, that can help build your book of business real quick? Well, I don't have those friends and family. My family blue collar, and we did well, but didn't have millions of dollars. So I ended up at a penny stock firm, believe it or not. And I learned all just what the industry, penny stocks are such high risk. But I ended up at a penny stock firm. And what I did learn there was all the things you shouldn't be doing, right? As an advisor, high pressure techniques, and the things that
Wolf of Wall Street stuff, right?
Yeah, definitely Wolf of Wall Street stuff. And even further back to that movie Boiler Room, which was based off of First Jersey Securities, which is probably one of the most well-known criminal organizations that ever existed in the investment world. But I the penny firm luckily got shut down and bought out by a regional investment bank, and so I went to work for that firm, and I got exposed to a whole new type of advisor. I got exposed to people that were looking at portfolios, not just stocks. They were really looking at measuring risk and really learning about their clients. It wasn't about selling a stock to a client. It was really caring about that holistic whole financial picture. I eventually ended up at one of the oldest regional firms in our state, and I was afforded a tremendous amount of freedom. So I did get involved in investment banking and deals, structuring deals. I had a quant fund. The quant fund we actually shut down 6 months before the 2008 collapse based on methodology. And from that point forward, I really took a passion to the markets. Now, for the first 5 years that I was an advisor, I was terrible. Just terrible. If every habit, every technique, I tried it all. Dogs of the Dow, moving average crossovers, death crosses, you name it, I did it. And they would work for a little bit, but then they ultimately fail because market conditions change and you have to adjust to it. And I had a guy sitting next to me that is the best pure trader that I had ever met. And so in my younger days, I didn't have emotional control. So I would smash phones. And these were those old PBX phones that cost a lot of money. And I think I was up to maybe my 8th or 9th phone that I had smashed. And there was a concern that I was going to get fired because I kept destroying company equipment. And he had mercy on me. He said, "Hey, I'll teach you how to trade correctly, but you got to do everything the way I say. And, you got to stop smashing phones, man. You're going to be working at, McDonald's if you continue that shit." So, of course, oh yeah, I'll do that, and of course, within the first week, I, immediately broke rules that he had taught me, and so he stopped teaching me, and I went back and begged him, and then I got serious about it, and from that point forward, so for 25 years, I've used that technique, that methodology to trade, and I built a very successful business off of it. And I ended up retiring in December of 2022, and I didn't know what I was going to do. What am I going to do with my life? I have this knowledge. I'm really passionate about helping people, and so I saw this thing about Wall Street bets. I'm like, all right, let me go look at this. And when I went in, I'm like, oh my gosh, these people are insane. And so I did this post about how the governments, central banks are using oil and currency to suppress the VIX, the volatility index. And literally in 48 hours, I got 1.6 million views. I'm like, holy crap. There is an audience that wants to learn this. Now, truth be told, about 20% of it was hate, hate comments. You're an idiot. You don't know what you're talking about. But out of that, I got 4 or 5 people said, hey, why don't you open a Discord, and we can talk about investments. Okay. I didn't even know what Discord was. It took me, literally, it took me 2 days to get on the Wall Street Bets and Reddit. I'm like, what is this stuff, right? This is foreign. And from those 5 people, as you know, we've grown to, over 300 and, people who want to learn in an environment that they're not going to be in an echo chamber. But I've calculated, I've got probably over 90,000 hours of screen time, literally sitting in front of my screen and watching. And so what I tell people is, look, you can borrow off of my mistakes. I've made the mistakes. I've lost the money. I've done the dumb things. I've anger traded, so,
Oh,
and
boss, I can at that point, because that's such a big one. I think that's exactly Luke and I over at Wall Street Wildlife. We just made a PDF of the 10 laws of the jungle that we call them, which
Mhm.
are all about these insights about investing psychology. And my contribution is to the project is, see these 10 laws. The reason they're laws is because I know what happens when you don't follow them personally. From fucking bloody, mud, face in the mud experience, including the recent debacle. So, to anyone listening, I think when MrNotAdvice tells you he's made these mistakes, I would say, for my money, that is the most beautiful phrase you could hear from an investing professional, because they're not trying to sell you, shit covered in gold,
Mhm.
right? We're saying we've done all these fucking brutal things that have cost us so much money, and we now know for real. So
Yeah,
I
I've
just
had.
want to emphasize that, right? And it's the kind of humility to be able to admit it. That's the other differentiating piece, I'd say.
I was just on a call with somebody, mentoring them, and we were talking about mistakes, and he was saying, oh, yesterday I decided I'd try to trade this product, and I did a little bit of revenge trading. And I said, okay. And he says, I lost like $300. I said, okay, that's nothing. And he goes, what do you mean? I'm like, well, let me tell you my story. I said, I decided one night that I was going to trade futures, and I'd been trading it somewhat successfully. But one night I said, I'm going to trade it when the market's closed because I'm a genius, and the only people who play in that time are idiots, and I'm smarter than them, right? And look, Krzysztof, this was literally, I'd been in the business for 20 years when I decided that I was so smart, right? So humility sort of went out the door. I lost $30,000 in 15 minutes. $30,000. Now, that's a lot of money to anybody. But what made it worse was I ran over 60 trades in 15 minutes. I anger traded. I FOMO'd. I did everything wrong. And if that's not bad enough, guess what I thought I was going to do the next night? I can make it better this time. I can go
Right.
back in and I
Right.
can fix all the mistakes I just made to lose $30,000 in 15 minutes. And my point is, we are all, prone to that. And what I try to do is, and what we both try to do is, when that animal spirit, Wall Street Wildlife, right? When that animal spirit sort of starts rising up in you, there's got to be a break. There's got to be something that slows it down. There's got to be an option for you to say, no, I'm going to try a different path. Because if there is no option, meaning there's no other choice that you're aware of, you're just going to go down the path right? And you're just going to continue to do it and think it's going to be different. Wouldn't you agree?
Absolutely. Absolutely. In my graduate school days, I was a pretty serious poker player. Love the game. I think it's a beautiful art form when played at the higher levels. The lower levels are more mathematical, but once you get higher, you're playing the people and not the cards. It's
Mm-hmm.
really an incredible practice slash art form. But the thing that's stunning to me is what you were just describing. What's in the poker world is called tilt.
Okay.
Where you are losing maddeningly. And believe me, in poker, the ways you can lose want to rip your eyes out. And it doesn't matter, even if you are a professional in that world and say you've lost for the third consecutive time on the very last card because somebody did something stupid.
Mm-hmm.
That feeling that comes over you is like it's like a evil spirit comes inside, and you no longer, to whatever extent it takes over, are in possession of who you are. And if you do not circuit break that
Mm-hmm.
immediately, you will lose potentially, forget days or weeks stakes. You might end up losing what you've made over the last months or years in a span of a few hours. It's in this phenomena that's the interesting thing in poker, in the poker world. It's like a blinking giant neon sign. This player's on tilt. Everybody knows about it,
Mm-hmm.
right? Everybody, nobody that plays on any level doesn't know and isn't wary of it. And yet, talk to any professional poker player. One of the best tables you could ever sit at is when you know somebody's on tilt.
Really?
Right? And you can't. It's almost like it from the inside. It feels like you can't help it. Of course you can, but it's it's very different when you're in the middle of it. So I'll say this. I'll say one more thing about this. This is maybe the most salesman-like thing I'll say today. I believe that even with all kinds of self-awareness and even discipline, when that kind of force is so strong, it might still overwhelm you, which is tragic in a lot of ways.
Mm-hmm.
But the one thing that I think can help more than any other is to belong to a community of people that have your back, or that are sort of in the same boat together.
Mm-hmm.
And you know what I'm talking about. When you join a Discord community like the one you run, or like the Wall Street Wildlife stuff that Luke and I do,
Mm-hmm.
you are all of a sudden positioning yourself amongst people who will be willing to not call you out, although that's maybe what it feels like in the moment, but will be able to say, pump your brakes, let's examine this carefully. And that togetherness, if I could call it that,
Mm-hmm.
is probably enough to short circuit that madness, temporary madness. That's the I would say. So let me summarize. That's probably, from my perspective, the most valuable aspect of belonging to a community, an investing community, whether it's 7investing.com for long-term stuff, your Discord for psychology and trading.
Mm-hmm.
You have other people watching and willing to call you out.
Yeah, I think if you are not in that community, I think there's an easy test, and it's that whole echo chamber thing, right? If all you're hearing is people affirming each other, and there's nobody that's saying, hey, can we look at this differently? Is there a possibility that there might be other analysis or another way to look at it? I think that's a good test to know whether or not you're in a community that is going to have what I call intellectual integrity, right? It's that ability to look at things that are counter what you believe and have somebody. And I think that you're spot on in the right communities, and certainly that's been one of my goals. We're when you get questioned, it's not a personal thing. We're not questioning your intelligence. We're just offering a different point of view of, hey, have you considered this data point, right? Have you considered it? And if you're in a community now where you don't hear questions or comments like that, I'm pretty confident to say you're probably not going to. It's probably not going to produce a lot of positive returns for you over time. But just like when you play poker, you're counting cards, you're doing the probabilities in your head, right? You're looking for a weaker player, you're looking for trends. that's what we do in investing and trading. How you and I do it, we're not, sitting there. I mean, because you sit at a poker table, and I played blackjack. You can also sit at a table where, for lack of a better term, you're at a table full of degenerates, who are constantly, they're not using odds, they're not using probability, they're really doing, they're gambling. They're just, they're just flat out gambling. And I see so much value in, and I've told people this, and you want to be a good trader, and learn how to play blackjack, learn how to play poker, learn how to do that real-time analysis, because there's so much value that. And to me, the value is emotional control, right? It's when you're up, not to get crazy, and when you're down, not to be despondent.
100%.
I wanted to talk about one of our stocks that lately has had some news, Enovix. And so I'll just start off with this statement. It's a dumpster fire right now. And it is classic example of what happens, of what we just got done talking about. Echo chambers, right? Listening to people that don't really care about you making money. I mean, it is.
May I interject for 1 second? For anybody new to this pod or investing in general, one thing, it's useful to understand what a company is and what it does up front. To me, from my perspective, and I think, boss, you disagree to some extent because, and you could, I won't speak for you. I personally don't want to touch an investment, at least that has, to me, long-term potential, without doing my own independent research into what does this company do. We could get into the thorns of that position, I think, later. I personally wrote up a long investment report about Enovix for 7investing.com, maybe, I don't know when it was, maybe a year ago now. So if you want to check it out, head over there and you could see my write-up. It's many pages long, and it talks about the company as a maker of lithium-ion batteries that are the next best thing. And that's why this investment itself is so compelling, because since 1990, our batteries more or less have remained the same, but obviously the demands on our gadgets have become exponentially higher. So if a company can genuinely come along and make lithium-ion batteries better in all the ways, faster charging, more density, all of it, which Enovix promises to do, then this investment could become truly, truly spectacular. That's why the drama. That's the setup for the drama and the intrigue. So that's kind of where you meet us. So sorry for the interruption, boss.
Oh no, I think it's super important, and I think you're keying in on something that's super important. Enovix has a great story, great potential. I mean, they really do. If I've said this before, I'm like, shit, if they only do 90% of what they said, if it only works that, I mean, this is a company that literally could change the industry for batteries, battery storages, especially the demand on batteries and IoTs or cell phones. But here's the way I look at stories. Okay, I look at stories as a roadmap, right? If the company tells me, and in this case, the CEO says, we're going to do this, this, and this, you give them a little leeway on time, but then they don't do those things. That's a concern to me. And it concerns me because if you're a long-term investor, you're going to ignore that. You're just going to keep reading about all the good potential in the story all along. And especially with Enovix, you're going to watch your investment go down. And so, you and I do have different trading styles. My trading style is very simply, I want to be in the market the least amount of time to make the most return and have a highest probability to do so. And it is a little bit different because I don't tend to deep dive into a company. It's for me, it's because I don't know what metric is going to drive that price forward. of all the metrics that exist, right? And I do miss, whenever I hear somebody say, well, Enovix is going to be the next Microsoft. And so, okay, did you see what, when Microsoft went public, what they did, what their core business was? It's easy to look back and say, oh yeah, I would have bought Apple at $4. No, you wouldn't have. You wouldn't have held it for 10 years either, And so, it's being real. And why are you really in this investment? Are you in this investment because it's a great story, and okay.
Right. So actually, I think that's a good point. Can I return you
Yeah.
to what you originally started saying? I think if we want to give listeners a quick snapshot of reviews on Enovix, you started by saying this is a dumpster fire right now.
Yeah.
So I think we understand, at least in short, why if these batteries work, the stock's going to be a tremendous success. Okay, that's a given. Why is it a dumpster fire?
Well, a couple things happened this week, but the lead up to it is, it does not matter how good a story is for any company if you don't have customers. Okay? If you don't have somebody to sell your product to, you're not going to make money and you're not going to stay in business. And it started back in the fourth quarter when they were going to supposedly release the name of a large OEM customer that would use their batteries, and we were led to believe it being the cell phone area. And they did.
Can you explain what OEM means?
Sure. OEM is going to be your original equipment manufacturer. So you're going to think about the Apples, the Samsungs, the large cell phone manufacturers. And that would have been, literally that's a home run, right? You get a startup company in the battery space that announces, hey, we got Samsung, we got whoever, right? That's a company changer. Okay. And, they had commented that, we're going to announce that in the fourth quarter. Well, they didn't. Okay. Now we're here today, and this is such a good snapshot of what happens sometimes with these investments when you get into an echo chamber. For whatever reason, one of the largest supporters of this stock, the most vocal supporters of this stock, came out with a tweet this week, and it literally collapsed the stock. Now, he didn't have any material information to report. He was talking about his opinion, okay? But because he had built such a big following, it collapsed the stock.
And by the way, that's right. This is no ordinary just Twitterer. This is a very, very public personality with a lot of background to his name.
All I'm going to say about it is, I trade on public information, right? I do, and that's a whole nother topic, but he has amassed a massive following. And up until yesterday or 2 days ago, everything was great. Everything was fine. Everything he posted was positive. He comes out with one tweet, just one, and he's talking about doubts, and he's calling management out that they better start supporting and buying the stock. And he effectively insinuates that if they don't, I'm selling. Well, the market didn't give him a chance. They cratered the stock. And so then subsequently after that, the guy's gone on Twitter and said he had, and I hope this is not true, okay? That he sort of had a mental emotional breakdown on Twitter. He shouldn't have posted that, but the damage is already done, man. It's already done. So, there's many, many, many lessons in there. But the big one I think that's in there is, again, going back to what we first started talking about, just because somebody has a lot of followers doesn't mean you're not in an echo chamber, right? And you and I have had discussions, lengthy discussions about concerns that we both had. And I've been, very public about some of the concerns I had about Enovix. And it's goes back to simple. They don't have a customer. They do not have a customer.
So, boss, let me ask you a practical question, and maybe this will be a good point to end our first episode. We overwhelm our listeners by overstuffing their heads with all this info. to me, it feels a little like a chicken and egg question.
Mm-hmm.
So let me explain what I mean. Here I am as Apple, right? And I just released this Vision Pro gadget, which is potentially the next thing.
Mm-hmm.
But of course, on the side, it has this big battery pack, which, if it could be made better, they want it,
Mm-hmm.
right? And here they would want it. And here is this little, still pre-revenue company, Enovix, saying, we figured out how to make the battery you want. But of course, we need orders to make everything happen.
Mm-hmm.
But Apple might be saying, well, why would we give you the order if you can't yet make the batteries? So how do you think it is at some point, right? A customer has to sort of maybe take the leap of faith to
Mm-hmm.
say we believe in a company enough, or how do you get out of this jam?
Oh, I think that, like, using Apple as an example, and I would bet your life that it's not Apple. But they're going to come to a company like this and they're going to say, okay, we'll try you out. We want to see if the tech works. Okay. And that would be an announcement. That's the announcement I was looking for. I wasn't looking for a 1,000,000 unit order. I was merely looking for, hey, who is it, that's trying you out? But more importantly, Krzysztof, what I'm expecting management to do is to do what they said they were going to do. They said they were going to announce a new OEM customer in the fourth quarter. They did not. Okay. And here we are today, and they still haven't announced it. Right. And now,
So is your thinking like, if they had it, of course they would announce it because that's better for stock price and better for the company. So
mhm.
therefore, implied is almost obvious that they don't have it. Or could
Yeah.
it be some more gray area where they
Well,
confidentiality issues and no?
maybe the tech doesn't meet the standards of the OEMs they're testing it with. Right. I mean, that's what
Could
I'm
be.
thinking. I'm thinking that maybe the tech is not meeting the benchmark standards, the recharge cycles, how many recharge, how fast it recharges. And I think that's what's going on. Because I agree with you on a chicken and the egg. Like, well, how are these guys supposed to get an order, right? Because the customer's saying, well, we're not going to give you an order until we can see if it works. But here's the other thing. In the fourth quarter, the what I brought up was the whole issue of, was they really focused on, look at the facility we're building, and we're far ahead, and I'm sitting there going, oh, that's great, because even when you get the facility built, so the OEM is going to say, let's test it, make sure it meets our technical requirements, but then there's the next test, which is, can you guys build enough of these? Can you scale your production? Right? And these are two really huge ifs, because if they don't have the initial interest that the technology works for that OEM, okay, they're not going anywhere, right? The company. And then after that, if they can't prove that they can scale it, okay, the OEM is not going to follow up with a large order. So I think there's two huge benchmarks that need to be met. And what's interesting to me is, for a lot of the Enovix polls, they just assume that they're going to be able to scale. They just assume that the OEM tech, that the OEM, the product's going to work for that particular OEM. Those are pretty big assumptions, and I think, if you ask me today, where do I think Enovix is going? Okay, I think the stock's going lower because there's no news to release now, unless they surprise us. And the institutions clearly are getting frustrated, because I work for an institution and I'd be frustrated, right? You guys keep pushing the timeline out. You keep playing, what I call, hide the salami here. We'll focus on this, focus on our plant. No, let's focus on this. Look, all I need you all to focus on, okay, is number one, prove the technology. Number two, prove that there's interest. And then number three, prove you can build enough of them. It's a very simple formula, right? But it's very, very hard to execute. And it's especially hard to execute in the time frame that they were talking about. Remember last fall when Enovix was talking about it and when they were going to achieve revenues? Where are we at now? Out to 2025. So if you're in the stock, it's dead money. It's not, there's no catalyst for it to go anywhere, right? I mean, what do you think?
Well, the catalyst would be, like you said, it's the unexpected announcements that if they were to announce the things you're looking for, the stock price shoots up massively. As far as I could tell, the danger is that the longer revenue gets pushed out, the higher the likelihood is of more dilution, correct? Which is why institutions are extremely wary and why the
Well,
stock price might
well,
go
let's
down,
let's
right?
be blunt. If they don't have a customer, they go to business,
Right. Yeah.
right?
Well, they
And
have.
I mean,
They're
I'm not
shocked.
saying they're not a going concern because they got plenty of capital. But what I am saying is at some point, the investment community, and I think we're at the breaking point now, is going to start saying, okay, we heard your story. We've heard the 4 million podcasts that you guys have done. We get it. You don't have to sell us on the story. Now you have to execute. Now you have to execute. And I think that's where a lot of, circling all the way back to what we started about. Hey, that's where investors sort of come off the rails. They ignore the lack of execution and they just say, yeah, the story's there. Okay, the potential's there. Hey, you can build, this isn't Field of Dreams, man. You build it and they will come. It's got to work. And it is, you made the comment. If they had one, they would have announced it, right?
It would seem like there's one more thing that I wish I was more well versed on it, but I believe in April. That's another tangible date they've been emphasizing, that in April they will. That's the date by which, what was it? They will announce qualifying.
The testing
Something
with
about
the 6 SKU testing with the OEMs.
I believe so, but as far as catalysts go, anyway, from the strict stock perspective, April is a big date. If they deliver on that deliverable, whatever it is, something about qualifying orders, customers, a certain line being up and now delivering. So bracket that loosely. If they deliver that, the stock might also react very positively. If they don't, it might be further evidence for what you're saying, just nothing holding it up.
Yeah,
Besides story.
but Krzysztof, we've had a lot of big dates. We've had a number of big dates that Enovix, I mean, come on. Their track history so far has not been great.
Not great, boss.
Yeah.
Not great.
Yeah, it hasn't been great. So, they can say April, but, if we use just recent past behavior as predictive of the future behavior, they'll blow through that date and do another podcast of how great their story is. Look, I'm not down on these. This is not personal. Okay. This is your money and my money being used in a company in their stock. They sure as hell better do what they say they're going to do. And I tend to take a very strict view of that, so, we'll have to.
That right there, I think, is the mantra that our listeners should take to heart, because that encapsulates, I think, your perspective very clearly. You're not a bull. You're not a bear. You don't have some cynical, deranged view of wanting this company to fail.
No.
You, of course, want it to succeed because these are good people making, trying really hard to make a really important product.
Mm-hmm.
But you are not maniacal in forgetting, getting caught in the story, and you're remembering, or you're asking us as co-investors and people in your community to remember, at the end of the day, from this perspective, this is your money and the company does not care where that money comes from. It is blind to that. So you, as an investor, have to really seriously remember that point.
Yeah.
Can you stay objective?
Yep. And let me I'll close with this very brief story. My firm brought it's still in existence, a discount airline public. And I remember, in this talking with the CEO, and he told us what routes they were going to choose and what the strategy was. And they were going to choose routes that were more commuter routes, right? And I wake up one morning to the news that they're going to start flying out of JFK, right? And they're going to start doing cross-country routes. And so, you may see, oh, that's super exciting. Well, not if you get into the business aspect of it and you see how much it costs to have a gate at JFK, right? You're going, wait a minute. You guys only have 7 planes. We see your margins flying these commuter routes to Nebraska and Phoenix. Now you guys are going to start flying to JFK and compete with the big boys? I remember getting on the phone with the CEO and saying, hey, you told us this. He goes, well, business conditions change. I was, all right, I get that. But you told us when we did the raise for your company that you were going to focus on these commuter routes. Now the whole model has changed. Your expense model has changed. And he said, well, you obviously don't know a lot about business because businesses have to change and adapt. I said, no, you're probably right. I don't. But I do know a lot about if you say something, you better do it. And he said, well, what are you going to do? You're going to sell all the stock? I said, yep. She says, oh, now this is a pissing match. I said, no, this is not a pissing match at all. This is not personal, but what the takeaway for me was, I sat there and I thought, how in the world does somebody who just got $12 million, okay, based on one business plan, and then a month later, they're announcing a completely different business plan, and they think, oh, that's okay. I can do that. That happens so often, Krzysztof. It just happens all the time. And investors are so unwilling to hold a company's feet to the fire, right? They don't feel empowered.
Yeah. Right. So this is to our old and I guess new listeners. I guess everyone's going to be a new listener. This is my own sales pitch for why MrNotAdvice's community is so worthwhile you checking it out. This is a man who has, as you just heard, all kinds of experience from having lived a bunch of deals, from being on the inside, and that's rare. And he's going to tell it like it is. So check out his website at MrNotAdvice.com. There you will find all the links you need to find his Discord channel, as well as ways to get in touch with him. Really, really useful, really, really supportive community. So again, I encourage you, if nothing else, just check it out and hit up the boardroom channel and ask questions. Very encouraging. If you're interested at all in what I do and the 10 laws of the jungle, check out wallstreetwildlife.com. And we also, Luke and I also have a YouTube channel, wallstreetwildlife.com.
Krzysztof and I don't agree on everything. So, but we can respectfully, mostly, talk about the things we don't agree about, so, but no, look, people, check out Seven Investing in Wall Street Wildlife, because there's so much knowledge and experience there. This isn't some guy who woke up you're not a guy who woke up one day and said, hey, I think I'm going to do a newsletter and I'm going to do this. And I have zero experience. You've lived it too, right? Over 2 decades of it. Yeah.
Yeah, we both have, right? Yeah, there's a lot of scars on both our journeys.
Well, you want to close us out, man?
Yeah. So, I forgot. At MrNotAdvice at X, and I'm at 7, the number 7, Flying Platypus on X. So that's the last way to get a hold of us. But I think both of us encourage you to check out MrNotAdvice's Discord community. I'll say it one more time because that's where you get real life access, and you can ask questions and you will get an answer from, veterans in the field, not some scammy room on some internet portal.
It's free.
That's the last of it.
It's free. Right. So, all right.
That's right. The first one's free, children.
Yeah,
the first one's free.
All right, man. Hey, thanks for today. I look forward to our upcoming ones. And I thought you were skiing this weekend, by the way. I thought you were out skiing or something.
That's Luke.
Oh, that's Luke. Okay, because I thought you guys were going to have a drinking contest while you were skiing. So
yeah.
All right. Hey, thanks for doing this. I look forward to our next episode, man.
My pleasure, boss.
All right. Have a good day.
Talk soon.
Bye.